As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is Thankful Thursday day session, IOD NRW day session. It is August 24th, 2023. I have four amazing souls on the call with me. I got my bro Raheem, I got Robert Bob the Builder, I got Daniel Forbes, and then I got Tony, Tony, as well as myself. And we're simply looking at GBPCAD on a 15-minute time frame perspective. Now, here's the deal. All of our templates, the seven templates are based off of divergences. The seven templates are based off of divergences. And are you doing all that you're doing is just simply reacting to what the market prints. You're just reacting to what the market prints. So here's the deal. Right here, a few sessions, couple sessions ago, we simply saw this. We have this mark on the 1 minute time frame. Okay. So let's go over that first. Let's see how we'll be able to ping pong this. Okay. So here's the deal. On the 1 minute time frame, back here on the 1 minute time frame, we have price creating what? Bearish divergence, correct?
Yeah.
Makes sense? So you can see how
Yeah.
price is slanting upward right here.
Yes.
Price is slanting lower. That midpoint, line it up with the cursor right here. See this midpoint right here? This is what I'm talking about, the midpoint. Line it up with this. There's your change of character area. Make sense? So now what
Yeah.
happens is this. Once you got price diverging and then changing character, that pressure, the supply zone that causes change of character in this scenario, it automatically becomes a point of interest. Automatic. Because that's where the pressure came from, where price decided to change the character. Because price may want to come back and respect this area and then sell off. It may want to go bearish, correct?
Yeah.
That's still possible. Don't we're just to say just for instance, we're just in this area right now. This is not printing yet. Okay. So now we see how price diverged and changed character. Okay, cool. We looking like, okay, cool. This makes this a supply zone. Okay, this is my 1 minute supply zone. Okay, cool. Bet I'm still sitting on my hands, right? Because I need to
Yeah.
see what price is going to do next. So then price after price once price actually created that change of character, it actually solidified and say, hey, bam, we changed character. Did price consolidate and go down, or did it come back to mitigate the supply zone that caused the change of character?
It consolidated and went down.
It consolidated and went down, right? So what do we
Yeah.
have now? We have one opening balance, right? And then we have
Yeah.
two opening balances, right?
Yeah.
Consolidated, went down, and broke structure. Guess what? That's trading template number two, which means, oh man, we got one imbalance. We're standing on one leg right now. Now price consolidated, and now we're standing on two legs. Like we really imbalanced. We had one imbalance. Now we got another imbalance. Price likes to remain balanced, just like us. Price is a reflection of human beings, right? Would you like to stand on one leg forever, or would you rather stand on two? You'd rather stand on two, right? So the thing about it is
You
this.
don't know.
The thing about it is this: if you're in control of the bears, you're in control of the red candlesticks. After you change character, what you would do is come out and balance out and put this other leg down before you do what? Create a new low. You're not going to sit up here and have a double staggered balances. Okay. So now we know that, hey, you're looking for that bullish reversal off the 1 minute time frame. Because price did what? Diverged, changed character, consolidated, and then broke structure. We know we're looking for a bullish reversal. Guess what? Price right here. This is probably the brand new trading day right here because these candlesticks look funny, right? So then right below here, I took one trade a little bit too early, right? But then I seen that right here, price created equal low liquidity, aka a double bottom. Okay. So retail traders or ill-informed traders that still trade these retail trader concepts, they don't understand that they don't see liquidity. They don't understand what liquidity is. So a double bottom was intentionally created for what? For inducement to have buyers come into the market early. The market makers intentionally made this move, equal lows, knowing that people are going to take it, don't understand liquidity. Price goes up, and then does what? Comes back down to take out the liquidity, hit these stop losses, because people do what? They put a buy entry right here and have their stop losses resting right below the double bottom. So price did what? Came back here, ate that fuel up, fueled up before it drove off to the next destination. That makes sense?
Yeah.
So we could have simply caught these sales back into and to sweep this liquidity. We could have simply caught it, but it wasn't enough risk to reward. This has probably been like a 1 to 2 or 1 to 3. If that was okay with you, you could very well take it. And it would have been out of session. But I mean, you lower your lot size to like 0.5, right? Instead of risking 1% since you're trading out of session and you're not trading with any volatility. And then in the sell, because guess what? Price did what right here? After this double bottom, price did what? Created a bearish divergence and then changed character right here, right? Let's go confirm. You see how price is slanting upward on the candlesticks, and you see how price is slanting lower on the RSI. That midpoint right here, line it up, change the character area. Price decided to do what? Change character, come back and do what? Create another divergence. You can't really see it on the 1 minute time frame. You have to go to the seconds time frame, which you have to upgrade your trading view package to Beyond Pro. Right now I'm on a Pro trading view package. So it doesn't allow you to go past the 1 minute time frame. It doesn't allow you to go to the seconds. So anyway, price respected this supply zone, right? That changed the character and did what? Went down and broke structure. So then our mindset would be like this. Okay, cool. This is trading template number 1, where we can automatically do what? Place a sell limit. But here's the deal. Here's the trick. Here's the trick that you don't see. Right here, with this little small divergence and change of character inside of here, right? Price did what? Price after price change character, did price come back to mitigate this supply zone that caused a change of character? Yes or no?
I say it did.
No, it didn't.
Almost.
You see how you got an order block right here? Look at this. Price never came back to mitigate the supply zone. Look at this red block. Not this one, not the bigger one, but this one inside, right here. Did price at once price change character right here? Did price come back and mitigate the supply zone?
Okay, you just fell short.
No, it did not. It's either going to mitigate it, either it's going to mitigate and disrespect, or it's going to mitigate it and respect it and go down. But the thing about it is, price didn't even mitigate this. So it did what? Consolidated and broke lower, right? So you knew that a bullish reversal was coming. You have one open imbalance, two open imbalances, right? You knew the bullish reversal was coming. Here's the reversal. Bam. Nice 1 to 8. 4 pip stop loss, 39 pip gain. And guess what? Because on the higher time frame, we that what? We knew that buy was what? Counter trend. We knew that this buy was counter trend. So guess what? Because on a higher time frame, we're creating what? A higher time frame right? Price is doing what? Slanting upward, slanting lower. Also on the 15-minute time frame, price is doing what? Slanting upward, slanting lower. Midpoint change of character area. So we knew that what? We knew that this buy was counter trend. We knew that buy was counter trend. So guess what? Right here, where what? Price diverged even on the 5 minute right here. Let's go to the 5 minute. Even on the 5 minute right here, price slanted upward right here, right? Price is slanting upward and price is slanting lower, right? That midpoint right here, change of character area. Once price changed character, did it come back and mitigate the supply zone? No, it did not. So then it consolidated and then what? Broke lower. So guess what? This right here is the what? Triangle, right? Of the the second imbalance, right? Let me draw it. Let me draw it out. So here's the deal. Here's your 5 minute divergence. I'm gonna turn it orange. 5 minute divergence. Here's your change of character right here. You had so many reasons why to know that this was going to that buy was a counter trend. So here's the deal. Did price come back when price changed character? Did price come back to the supply zone that caused a change of character?
No.
No, it did not. It consolidated and did what? Broke structure right here on the 5 minute, right?
Yeah.
Okay, so watch this. Now we know we have one opening balance, two opening balances. Guess what? Look at this right here. The imbalance right here, right? From this high, you draw it around this consolidated zone. And I guarantee you that if we draw this zone, we pull this 5 minute supply zone that I just marked all the way out, I guarantee you that wick on this buy entry is the bottom of this zone. I guarantee you. Watch this. Look at it. Right there. So you knew that, okay, cool. I got two imbalances. I got two open imbalances. I know that, hey, if I'm looking for this buy entry right here, I know this imbalance right here is TP1. And then this imbalance right here is TP2. So this being TP1 right here, right? Look at this bearish divergence right here that developed. Right here. Look at this bearish divergence that developed right here. So let's go to a lower time frame and see how we could have picked this off and got back in for the sale. Watch this. Diverged. Not quite. Just smacked it and dropped. Probably had to go to the second time frame to see it, but we still could have picked it off because the thing about it is we know that the triangle right here, the one that created a second imbalance and broke structure, we automatically know if we look for a bullish reversal, this is TP1. We automatically know that. And then look what happened. This turned out to be a harmonic pattern, something that I used to trade, which is, remember, Tony, buy the M sub W, Robert?
Yep.
Buy the M sub W. So it turned out to be a harmonic pattern. This turned out to be a W. Watch this. And there's your sell entry. There's your sell entry. So this was the buy, back into the supply zone, and bam, there go the sell. So we could have, here's the buy, here's the sell, and then guess what? Now that you sold this, you got two open imbalances, right? You know a bullish reversal is coming, right?
Right.
Right, because now this is a supply zone. This is an imbalance. Remember, our point of interest are what? Unmitigated, imbalanced supplier demand zones that are either broken structure or cause a change of character. Right here is an imbalance, right? This becomes a supply zone because it broke low. It broke structure. It broke low. Did price come back to mitigate the supply zone, or did it consolidate and break lower?
It broke lower.
It consolidated and broke lower. So now you got two open imbalances, right? Okay, cool. We got a double stagger. Guess what? We know we're looking for a bullish reversal. So guess what? Bam. I said, after our stop loss got hit right here, I verbatim said, hey, I know our stop loss got hit, but I'm waiting to confirm for price action in order to get back in here for buys. So here's the price action I seen. Price action is just fancy terms saying read the candlesticks. All right.
Okay.
So let's see, on a 5 minute time frame, this particular bullish candlestick right here, it closed at least 50% of this bearish candlestick. This is what you call a what's the name of it? What's that? It's something not abandoned baby. Crap. It's not a Harami pattern. I forgot what it's called, but this bullish candlestick at least closed this bullish candlestick closed at least 50% of this bearish candlestick, and it's on the inside. Okay, and I forgot the term, I'm drawing a blank right now. But anyway, I seen that and I simply did a buy market execution, and I said, hey, where's my TP1? I'm at least going to what? The most recent imbalance, minimum, at least the most recent imbalance. This is where you can do what? Take partials, close 50%, and put your stop loss at break even if you're gonna ride to back up here. But guess what? The reason why I just went ahead and closed the entire position, right? Well, I mean, because by the time it got right here, by the time it broke this high right here, this structure, I closed 50% partial. My stop loss at break even. Okay, cool. Let the rest ride because my overall TP was right here anyway. Because then I start seeing what? I start seeing price diverge on the 5-minute time frame. You start seeing, look, right, upward right here. Price started slanting upward, and then this started slanting lower. I start seeing price creating a divergence. So I said, hey, I'm gonna go ahead and close my position right here, and I'm getting in this trade for a sale to ping pong it right back down. So it looks like it wants to respect what? This supply zone. So when price came back, I verbatim, I told y'all in the chat, on the 5-minute time frame on GCAD, Wyckoff is performing a Wyckoff distribution schematic. Did I say that?
Yeah.
Exactly, right? So then I started to see it develop. So then with my eyesight on Wyckoff, I started seeing the elements and the phases produced. So here's the deal. This is what I seen right here. Let me go ahead and mark it. This was a preliminary supply. I'm gonna mark all the points where the abbreviations are gonna show up. Weakness, upthrust. Here was the last one. All right, so here's the deal. This was a distribution schematic number 2. Okay, which you don't have when you don't have a UTAD in the test. All right, so I'm about to label it. So right here was a preliminary supply. This right here was a buying climax. This right here was the automatic reaction. This right here is a secondary test. This right here is a sign of weakness. This right here is the upthrust. And then price comes back down. And then over here is the last point of supply, LPSY. And there's your sell entry. And there's your sell entry to the downside. So I already had the entry in like right here. Let me see where my actual is at. Let me look on my let me see what my actual is at. 172.31. So I had an entry at 172.231. Stop loss was at 172.310. And then TP would have been all the way down here, at least to this right here, which is the entry of that. My TP would have been down here, but it would have been right here to the low. Look at this. Look how precise that entry is. And that TP would have hit. Had I held it, because I closed it out. I closed it out because I mean I was in my demo account, but had I held it right here, that's a ping pong. Like bam, they go to I'm telling you. So bam, it was a buy, it was a nice sell, it was a buy, it was a sell. Do y'all understand as to why you would have gotten in that trade for a sale? Does anybody not understand?
So this particular one, I think there should be schematic 5.
Template number 5.
The template number 5.
So this one particularly right here. So like I said, it's two different ways I trade. I got the 7 templates, and the fact that I've seen this divergence, this is a Wyckoff distribution number 2 schematic with the abbreviation I have listed. Okay, so I knew that's why I said I told y'all in the chat verbatim. I said, hey, I'm closed out the buying. I'm in for a sale right now because I said GBPCAD on the 5-minute time frame is performing a Wyckoff distribution schematic. And I got in for a sale. This is a distribution schematic number 2. So here's the deal. I'm going to show you. Look at this image. Kind of visualize this image. I'm going to show you a guide. I'm going to show you a guide as to how this played out. It's not going to be picture perfect, but I'm going to show you. So here's the deal. Let's bring up the guide. Let's bring up the guide, and I'm going to show you the reason why I was able to take this sale. Right here, you can see on your screen right now, distribution schematic number 2, right here, bottom right hand corner, is the reason why I took that trade. So right here, look at this right here. This is how I'm able to identify these schematics. It's not hard to see schematics. At first, I was dreadful, like, man, I cannot understand how to be able to, identify these schematics. Right? And you can't call a schematic until all the events or phases are there. So here's the deal. Right here on distribution, bottom right hand corner, you able to see it? Everybody able to see the bottom right hand corner, the schematic?
Yeah. But
Okay.
I wanted to get your thoughts on like the GBPCAD, like the looking at price coming up to that imbalance and expecting price to go back down from there. Was that the primary thing on your mind before you saw?
That's why the stop loss that that's the stop loss. That's why the TP that I gave you for the GBPCAD was right there. That's TP1. So when you got that double staggered, you got that divergence, change in character, you got that first imbalance. Price decides not to mitigate the supply demand zone that causes change in character, and it consolidates and breaks lower. That second imbalance, technically it's the second imbalance. That second imbalance, that's going to be your TP1. Okay? Always. That's your TP1 because price does not have to come all the way back to the divergence and change in character area where that first imbalance is originally at.
Yeah.
It doesn't have
that from that second one, there's also a possibility that price can mitigate that imbalance and go down from there.
Yeah. So that's why I'm going to show you something. Right here, you see these elements and phases on this distribution schematic number 2, D2, right? You have the preliminary supply, price goes up, creates a buying climax, comes down, creates an automatic reaction, secondary test, sign of weakness. So here's the deal. Here's how I was able to identify it being a distribution schematic. I've seen this W. When I seen this right here, I seen this W right here like this. When I seen this W right here, I said, "Oh snap!" I said, and then price started obviously it started diverging. But when I seen that W, I said, "Man, I could see a distribution schematic." I didn't know if it was going to be a D1 or a D2 because both of them got the W. The difference between a distribution schematic number one and number two is phase C. See, phase C on a D1 does a U-turn test. Phase C on a D2 does a what? Last point of supply. So when you see where I have it listed as upthrust and price did not break up above that upthrust, then it was what? A D2. That makes sense?
Yeah.
Okay. So look at this image right here. Put this image in your mind. And then we're gonna go back to go look at the chart. Here's the deal. Let's go back to the chart. Bam. Here's the chart. So what do you have? You have that preliminary supply, price pushed up, create a buying climax. Here's your W right here. Buying climax, automatic reaction, secondary test, not a weakness. Here's your upthrust. Price comes down in respect to the demand zone of the sign of weakness, and then goes back and does what? Either is going to create a last point of supply, or is going to do what? Above this upthrust, test. So because this upthrust wasn't taken out, you assume to this be a what? A distribution schematic number two. And then here's your sell. That's your sell to the downside. Here's your sell to the downside. That makes sense? I'm telling y'all stick with me. I'm telling you. I'm telling you. Does anybody not understand what we just went over? There was one trade, two trades, three trades, four trades we could have called. My market execution was literally right here. I did a market execution. Is this all like for real? Is this all making sense? I'm blowing y'all mind with this. Is this all making sense?
Where did you do the market execution at?
Right there, 172, 231, right here, where the last point of supply landed.
Almost near quarter level.
172, 231, right here is where I did a market execution. My stop loss was literally a pipette above that upthrust, which was 7 pips. And I was looking to sell all the way down here to this bullish candlestick where I caught the reversal to the upside. And look, price hit TP. And this would have been a 1 to 12. So guess what? Just this week alone, not even talking about the lessons that we took. Just this week alone, we did the 2 GCAD sales, which played out to be a what? 1 to 7 and 1 to 5. Right? Then we did a GCAD buy, 1 to 8. Then we missed this move to the downside. Then there's a what? 1 to 6 buy for GCAD. Then there's a 1 to 12 sell for GCAD. So that alone right there would have been 7, 5, 12%. 12 and 8 is 20%. And 6 is 26%. 26 and 12, that'd have been 38%. 38% of your account growth in 1 week. 38% in 1 week. People be dreaming to do 38% a month. But when you start understanding these markets and these templates and the templates along with Wyckoff, you'll be able to body and pick and ping pong the market all day long. You'll be able to do it.
So, bro, I want to also say something on the GBP card you took based off on the candlestick. So
right here.
Yeah. Since I want how when it comes to divergence in that kind of situation, if the market was no longer showing divergence and you saw that candlestick, would you still have taken the trade?
If market was no longer showing divergence,
It's after
and
that structural low and took you out.
so here's the deal. Also, how you also knew that there was going to be a bullish reversal. What do you have right here as well? One imbalance, two imbalance. Right? Price never changed character yet. Like we was expecting a divergence right here, but price never changed character. It never changed character until price created this bullish block right here, and then it gave us that what? Then it gave us the divergence. But we knew it was coming. And also with the session characteristics, look at the two countries we're dealing with. We're dealing with the Great British Pound and the Canadian dollar. So guess what? When is the Canadian dollar going to be volatile and move? During the New York session. So this move right here was during the New York session.
All right.
So when you also understanding your session characteristics, okay, cool. Right now, I know price ain't moving. Price is still creating liquidity, or price is still being choppy. Okay, I'm looking for the New York Open for price to do what? Make a reversal and go bullish. You start understanding session characteristics as well. You'll be able to pick it off.
That's awesome.
I'm placing this on my YouTube.
All right. That's good.
Like you could have literally bought a GCAD the whole week. You could buy any pair the whole week, as long as the setup. Let the market come to you. Let the market come to you. Like this can literally be a possible sell setup right here, because on the 1 minute time frame we have a what? A bearish divergence, change of character, imbalance, price consolidates, breaks lower. We knew we had a bullish reversal coming, right?
Yeah.
So this is the bullish reversal. And so now on a lower time frame, on a 1 minute time frame, price is coming back to this imbalance zone right here. Price is probably attempting to do what? Create a bullish divergence right here. So let's see it. I guarantee you about to do it. Look at it. Look at it. Look at this. Look at this. Look at this move. Look at this move. Watch this. 1 minute divergence. Look at it. Look at it. I'm telling you, all you have to do is put inside your mind and visualize. Hey, okay, cool, bet. So I think I'm about to take this GCAD trade. I think I really am. Yeah, this closes as a bullet. Oh yeah, I'm taking it. Let's see. I'm about to do this. Zone it around here.
Bye.
Like that. I'm gonna put me a limit right here. Stop loss from over here, 5 pips. And I'm gonna look to buy it back into the zone. So let's see. 171.356. Let me see. 96, 19, 12. Let's see. Since I'm already down, that'd be like a 0.5%. 1.0. Yeah. 171.356. GBPCAD. Five minutes. 171. What's this? 356. 171, 356. Stop loss from the low is low at 171, 300. 733. All right, got my order in. Got my order in.
Beautiful setup.
Because
Let's go.
why now your question is why did I make the zone the way I made the zone? Because remember we're playing a game of connect the wicks, right? Is anything touching this bearish candlestick wick? Right? Is anything touching the wick of this bearish candlestick?
No.
No. So the thing about it is this: something has to come back down to at least balance that out. And plus, what do you also have right here on the 1 minute time frame? You have a fair value gap. You have a fair value gap sitting right here in between what? Right here and here. And normally price wants to do what? Hit that consequent encroachment of 50% of the fair value gap right here. But I'm just looking to run it right. I front run my entries right off of that demand zone, the way I zoned it. And so if it doesn't come back and put us in, it just doesn't come back and put us in. Because now how am I looking at this? I'm looking at this like this. We have what? Look at this, bro. We have one open imbalance. We have what? Price diverged right here on the lower time frame, consolidated. We got two open imbalances. So we knew a divergence, we knew a reversal was coming. Right here, we have equal low liquidity being taken. Right here, we got liquidity being taken. So 1 minute liquidity below. Price took that liquidity, decided to diverge, and we're looking for price to come back here and smack this, and then we can do what? Go back into that bullish move. And then look at on the higher time frame, or even right here. You got price that diverge, change character, open and balance, consolidation, broke through, broke structure, open and balance, and the bullish reversal is coming, and this is the bullish reversal for that one. So now you're looking for price to do what? Price that already hit TP1, right? So then I'm looking for price to do what? Go back into this high and balance that out. If it doesn't, hey, it's okay. That's why you use proper risk management. You can't be afraid to pull your trades, man, but you got to understand, like, when you do take a lesson, I got to understand as to why, what happened, what occurred, in order for me to then how do I avoid it next time? You know what I'm saying?
Exactly.
So I'm looking at this, taking a buy entry from here. Already got the entry in. Looking at it, put it, smack the zone and go up. If it doesn't, hey, that's why you got proper risk management. You cannot avoid losing. You can only control the size of the lesson. You can only control the size. Let's see. Should be. Come on, baby. Go ahead and activate. There we go. Reactivated. If you put the same exact price number that I did, reactivated. See how this gonna play out. See how this gonna play out. On your stop loss, or it's gonna rally up against TP. Like I said, I'm looking at this being like liquidity being taken, and then price wants to do what? Normally, after price takes liquidity, it does reverse. Doesn't move in the same direction. I mean, like, I'm looking at this as a midpoint. I'm looking at this almost like a gigantic M as well. Price doing this. Take that liquidity, rally low, and then go back high. If it doesn't do it, that's why you have proper risk management. You can't be afraid. As long as you trade your setups, and I'm trading my setup. I see two opening balances, one right here. Price came right here, consolidated, did what? Boom, broke lower. And now I'm looking for that bullish reversal. I'm looking for that bullish reversal. And I'm seeing how prices attempting to accumulate and diverge on a lower time frame, on a 1 minute time frame. Right. And I'm looking for price to go ahead and go bullish. Who is actually afraid of taking lessons? Be honest.
It happens when you take multiple like back-to-back losses. It does
Well, no. So you're developing analysis paralysis. So the fact is that because you don't understand, take a lesson, and it stings even more when you don't understand why you took it. Like, why did this not play out? What is it that I'm missing that it did not play out? You know, and that's the difficult part.
Yeah.
That's the most difficult part is when you do take a lesson, you don't understand as to what transpired or occurred that led to it.
That's true.
So that's why I have 7 trade templates. If something plays out, or whatever the case may be, then I just take it and I just live with the results. I just live with the results. So because here's the deal also, because we have this opening balance, price consolidated, and then create this opening balance as well. I'm looking for this to go bullish as well because price had already did what? This bullish reversal right here, price had already smacked what? TP1, right? So then I'm looking for, hey, price wanted to probably do what? Come back down and refill the imbalance, diverge, and then go back up to smack what? This imbalance. Does that make sense? Think about it.
Yeah.
You see how it's all revolving and wanting to play out? You see how it's all revolving and wanting to play out? You got to think about it as in that aspect. Okay, cool. Because remember, price doesn't like to be standing on one leg, and it's got so many one legs in the market, you know, on multiple different time frames. So the fact is, we have what? Opening balance 1 right here, right? Price consolidated, opening balance number 2. Bullish reversal, price already blew through TP1, so then decided to do what? Come back and put this leg down, let's diverge, and then go back up and then refill this imbalance. So that's what I'm seeing. I'm not saying that's what's going to happen. That's what I'm seeing. That's what I believe. I'm just looking at based off of how price is developing and reacting, things of that nature. So I'm looking at this being a big, gigantic M. Rally up here, then look for a possible bearish divergence right here and sell it from here. Because then I'll be looking at this. I'll be looking at this as what? I'll be looking at this as liquidity that price wants to take out. That makes sense?
Yeah.
Slanted highs, price comes up, takes out that liquidity, and bam, does what? Takes the liquidity. People got their stop loss sitting right here because they trade trend lines or whatever the case may be. And then do what? Wait for confirmation, sell it back down to the downside and refill that imbalance. I'm telling y'all, bro, you can literally ping pong this market. And when I was watching WWA trading, like I was like, bro, how do they do it? I know they got their own trading story. They went through trial, error, mishap. And what I ask of you is this: if you are truly serious about the skill set, you love the skill set, do not quit. Never give up. I promise you, I am in year 4 and I'm still not where I want to be. Okay? But I'm telling you, through trial and error, through understanding the market, I'm telling you, it's going to work out and play out in your favor if you never give up. The only way you can become profitable is if you never ever give up. The only way your entries become better is if you never ever give up. The only way your stop losses can become this tight is if you never ever give up. We're in
Mindset is so
profits right
important
now.
when it comes to trading.
Say what?
I said mindset is so important when it comes to trading. I think we
Absolutely.
should
Your psychology is the most important thing. So here's the deal. You should get books. I know y'all see the books in the background behind me. Trading in the Zone. Trading in the Zone and The Disciplined Trader. Trading in the Zone and The Disciplined Trader.
Wow.
It's by Mark Douglas. As a matter of fact, I got a couple of books coming in right now. Let's see. I ordered Russell Brunson's newest secret, which is the linchpin. His latest secret, the linchpin. I ordered that. That's coming in a few weeks. I ordered a Master Your Mindset book last night, and I ordered something else with the power of positive mindset. I also ordered something else, which was Billy Allsbrooks that we looked at yesterday morning before I went to my 24-hour shift. Blessed Enough Stop. Ordered that book. So I got these books coming in because the mind is a terrible thing to waste, and you must have your mind sharpened multiple times a day, every single day, because so many distractions out there. So many distractions. So many distractions. So you must keep your mind reading them books. The devil is busy, but so is God. So regardless of what happens in this trade, we took the setup based off of confirmations. It doesn't matter. Okay, cool. If it hits the stop loss, so what? We have a profitable system that we trade. You just trade the system. Trade the system. And then you don't want to be emotionally attached to your trade and be like, oh, well, I'm gonna go ahead and close out because it did this, oh, I'm in the blue right now. Okay, cool, bet, fine, that's dandy. So here's the deal. We're in this trade for a buy right now. Where's TP1? Where have I always say where TP1 is at? Where's TP1?
The first high.
Right here.
Yeah.
The most recent imbalance. You said that way. The most recent imbalance right here. So when price comes right here and breaks up above here, I'm looking to do what? Hey, cool, close 50% partials, stop loss at break even, let the rest ride to TP. So right here is my break even for me. I'm not looking to take partials or anything until price comes to smack this area. So let me see. Alert, 1 minute alert. And then I come right here, add alert, and say GBPCAD, TP1 smash, close 50% partials, break even, create. Because what can price do? Simply just respect the supply zone and do what? Create another Wyckoff distribution schematic and then sell from here and go back down.
Exactly.
It absolutely can do that. Just like it did what? Up here on this one, you had the bullish reversal and price came what? To the most recent imbalance, gave you a Wyckoff distribution schematic for a sell to the downside. So that's why I say always the most recent imbalance is TP1 because it doesn't have to always come back all the way up here. Because it can simply respect the supply zone and broke structure. That's also a point of interest. And then simply do what? Sell from here. Yes, it can do that.
Yeah, exactly. That's very possible.
But my TP, I always put my TP at the overall TP. And then I set an alert at the most recent, as my TP1, I set an alert. Price alerts me. Cool. Go in there, close 50% of my volume, put my stop loss at break even, let the rest ride, Clyde.
Yeah.
All right. Any more questions, comments, or concerns? I am prepared, so I'm gonna go. There should be no stress and no fret in your trading. If you understand, if you visualize first and understand everything that's going on. I don't care how long the video is, I'm definitely putting this on you. There was so much valuable stuff that was unfolded in the video, this session. I could have very well held this, but it's all good. We ain't gonna trip. We ain't gonna power spill milk. But I told y'all verbatim, I told you to say, I said I'm in the cells right now on GBPCAD. All right. So nobody has any questions, problems, or concerns. I appreciate each and every one of you as always for taking time out of your busy schedule, you know, to listen to what I have to say. It is always greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, productive rest of your thankful Thursday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose, but more importantly, God has blessed us with our name on it. Always remember to be addicted to information, but never allergic to execution. Never stop learning, never stop teaching, never stop educating, and most importantly, and certainly not least, never stop praying. I will see you all in the next session, which will be this evening, 8 p.m. Standard Time, 9 p.m. Eastern Standard Time, 6 p.m. Pacific Standard Time, and that'll simply be 2 a.m. Nigerian time. As always, thank God. Y'all take care. I'll upload this on my YouTube as soon as we finish the version.
All right, bro.
All right, it's a blessing to see you today.
All right, y'all take care.